Last but not least, we welcome today Ravin Dajee, Managing Director of Absa Mauritius, formerly Barclays Bank. Ravin has been at the head of the bank since 2007, and over the time he has transformed the bank into one of the major players in the Mauritian banking sector. Ravin, thank you very much for accepting to be on our podcast.
Thank you. Thank you for having me. Thank you very much.
Ravin, it is well documented that the banking and financial services sector has been one of the most resilient, if not the most resilient, in the face of the pandemic. Although some critics argue that the growth rates have been quite modest in real terms, but there's room for discussion on that. What is your outlook today on the future of our financial services sector, now that we've come out of the pandemic, now that we're out of the FATF grey list, but we're facing new challenges, both domestically and globally?
Let me take the first point around, we did well during the pandemic, and most banks did well. I think it's important that to have a very sound banking sector in the country. We should be a reflection of how does the economy do. Very often people say most sectors are not doing well, but the banking industry is doing well. That shouldn't be the case. We are a reflection, and we're here as an enabler for the major industries and sectors of the island. But it's also important that banks do well. It's also important that we've got a very strong banking industry. Sometimes people say banks make too much profit. Everything is relative. Everything is relative. You have to look at how much money we make based on the capital we employ, how much money we make based on the equity we've got. And the average banking return on equity is around 11%. Now, you can't say 11% is super profitable. But the point I'm trying to make is it's important to have a very sound and solid banking industry to support the different industries. I believe we are well regulated. I believe we are well supervised. Most banks have got enough capital or appropriate capital to support their business. And if you look at us as Absa, we had three main objectives during the pandemic. One was to protect our own staff, make sure that staff work in a condition that allow them to be able to serve the client. Second was to make sure we protect capital and protect liquidity of the bank. And third was to serve our client and to support our client during those days. Now, if you look at the results of the banking industry for 2020 or 2021, we've gone back. We've gone back compared to where we were in 2019, both in terms of revenue. I think apart from one or two banks, most banks have seen a drop in revenue, and that's understandable. And have seen a drop in profit as well, because drop in revenue. But more importantly, we all have had to make additional provision during the pandemic. And so you'd have seen profit going down. 2020, late 2021, 2022, you would see most banks have registered higher profit level, higher growth level, which is normal, starting with a low base. Now, your question around the future and what the prospects are. Clearly, getting out of the grey list is extremely good for the country, but also for the industry, for the banking industry. We as Absa, we didn't really were impacted as much by the grey listing. Our correspondent banks, our clients, because we're part of a bigger group, and there's a minimum standard around AML, CFT, and the rest. So we were not really impacted. We didn't see much impact. But clearly, it's very good for the country. And when it's good for the country, it's good for all players. I can tell you already, if you look at the domestic business, in most sectors, we are already at 2019 level from a revenue perspective in the bank. I think there are other sectors that we need to support and we need to work closely with to be able, as I said, to be an enabler for the sectors. And I'm talking here the hospitality sector. We need to see how do we work closer with our clients. I believe the manufacturing is another sector that we need to work closely. I think you could see there's massive growth there. And the growth is not necessarily only because we've got a weaker rupee compared to 2018, 2019. But I think the volume is increasing as well. I think the issues we have in China, the freight issue, is making Mauritius, especially for markets closer to us, it's an ideal place to manufacture. So again, I think I see as an industry we've done well. When I say we've done well, we've managed to do the right thing during the pandemic. I think, and I should admit, together with the regulators, and I think we're better prepared for the future.
It's quite sort of refreshing to hear a positive outlook on things. Certainly, some sectors are struggling more than others, and it's very encouraging to see what has happened, how we've managed to hold things together within banking, within financial services. Yet, there are concerns out there, and I want to hear your views on some of the more recent ones. And I was looking at, for example, the pre-budget memo of the MBA, the Mauritius Bankers Association, where they talked about concerns about our credit rating, for example, that could suffer as a result of what's happening, throughout the economy. There are concerns about our own very global business sector, which the whole model is being called into question. What are your views on that?
The memo from the MBA in view of the budget, I don't think it's anything sinister or something that we should dissociate ourselves from. I think these are issues we're working closely with the authorities, with the regulator. I think what the paper tried to convey is that we all need to be cognizant of the fact that if there's a downgrade, the impact is quite big for the country, but also for the banking industry. And we wanted to make sure that these are put forward. But it's not a surprise to anybody because these are conversations we're having regularly with the regulator and the regulator with us. As much as we are worried, I think the regulator and the authorities also, I wouldn't say worried, but they're also cognizant of the fact that a downgrade will have bigger impact. And we're all working closely and together to ensure it doesn't happen. Now, there are other things that we, as an industry, we can't do much. But I thought that's one area, what we would call a headwind that we need to look at. And then we've ensured we make that. But there are other macroeconomic aspects that we need to make sure that we're on the right track. And we wanted to convey that. So we, the MBA, are together. So if you look at the broader aspect of the economy, I think there's a few areas that we need to get right, and together, working closer together. I think the current account deficit is something that we need to work together to look at. How do we increase the share of a manufacturing export sector, manufacturing more particularly to high level. Of course, inflation is something that we all need to watch and to ensure that we different means, monetary policy and so on, to look at inflation. The debt level is also to GDP something that, and you can understand why it's here now. I think it was important to secure and to protect the economic fabric during the pandemic. And I think, the different measures that were put in place were good, right? The question is from here, how do we get a trajectory which make it more sound, especially as a percentage of our GDP. So it's working forward, fiscal consolidation, and looking at how do we get the debt level at a lower level compared to peers in the same rating as Mauritius by Moody's.
Yeah, it's funny you talked about that. I was going to my next question, which you preempted. The current account deficit, you talked about that recently as well. Debt is soaring, inflation, of course, everyone is aware of it. Is there a danger that things will get worse before they get better? And perhaps that's the way that it is going to be, sort of naturally speaking.
And let's agree first, this is a worldwide phenomenon. It's not particular to Mauritius. It's a worldwide phenomenon. So most countries are similar issue, high debt, high inflation, low growth, right? So nothing specific to Mauritius. I think the question is, how do we face it? What are solutions we bring forward to be able to ensure that we don't get into a stagflation, and we we work and look at, and if you look at inflation, most of them are imported. Clearly, the depreciation of the rupee doesn't help, but a lot of them are imported. I think the debt, we are where we are because of, I said, the injection that was required to sustain the economic fabric of the economy. And growth is something that we all need to work together. So, and I said, we are where we are is how do we face these challenges, and how do we make sure that that investors, that entrepreneurs have got a platform to do well, and how are we thinking around attracting more players in this market? When I say players, investors from abroad, and we need to find the right environment to be able to do that. Now, you know, there's a lot of criticism that you can level about many things, not here and elsewhere. But again, we are where we are, and for us, we have to be positive. We have to be looking forward looking, and try to see how do we improve the environment. And you know, people, not everybody in the world is looking at Mauritius and say, how can I come here? We need to attract them. We need to create the environment. We need to create the platform to get them here and be able to increase growth. And I said, manufacturing, export-oriented growth is key for us to ensure that we stabilize the rupee and we create more jobs and so on. So I guess the big macroeconomic indicators need to be managed and managed properly. We need to have a path towards improving them, and we also need to create the right environment to stimulate growth.
Talking of exports, of expanding our manufacturing sector, one of the sort of the good news last year amidst the pandemic was the new agreements, the new trade agreements and the partnerships that we signed with China on one side, with India. A year on, when you look back, are we making the most of these agreements, or do you think there are different things that could be done to try and really maximize on the opportunities that they represent?
Listen, this is a journey. It's not a silver bullet that suddenly things change. It's a journey. But those agreements are key in terms of, as I said, developing that platform. But there's a few areas that we need to improve. I think there's a lack of talent on the island. We're losing talent as well. So we need to reverse that. We need to make sure we also attract talent from abroad. So, and again, if we believe that everybody wants to come to Mauritius, then we won't create that platform. It's not the case. Not everybody wants to come to Mauritius to work. We need to attract talent here. And it's important we get that right and create the environment and the platform to be able to attract talent. I think if you look at the other infrastructure, be it legal, be it telecommunication and so on, we're there. We need maybe to improve our air connectivity with a few places. The skilling up people is also important. We need to make sure that we've got the right, I said talent, but labor force to address the new issues, to address the productivity level, technology challenges we've got, and you look at competitors and so on. So the agreement will help, but there's a lot of things we need to get right. And I said, making sure that we've got the right skill here to be able to develop things is important, but also attracting the right investors. And again, there's a set of criteria that's important to be able to attract investors, and we need to look at those.
Do you think that would be one of the priorities of the Minister of Finance ahead of the budget?
I'm sure the Minister would look at it, but clearly, as I said, if you look at the key macroeconomic issues, current account deficit is one of them. And to address that, we believe that the export sector, the management is important. Could it be driven by local entrepreneur only? I'm not sure. I think we need to get a bit more players on the island, and we need to make sure that the environment is conducive, the platform is right. And as you say, we've got a number of agreement that we've signed. We need to make sure that we use them more and attract more players here.
And if I can, Ravin, conclude on this point, which I've asked all my previous guests before, is the fiscal attractiveness of Mauritius being eroded by the increasing tax rates, especially on the personal sort of side?
Yeah, it's always difficult to ask this to a banker, in the sense that they would tell you bankers won't lower tax. But listen, I think the few things that is important. You need to be predictable. You know, it's difficult if taxes change time and again. I think what people is looking at is they come and invest here. They want to know, at least for the short to medium term, what the tax rate would be, high or low, but it should be predictable, because you can't make a business case and then, you know, suddenly you see the tax level changing. So I think that predictability is important. Now, if you look at similar market as Mauritius, where there's no natural resource and so on, I think the fiscal regime is important to attract more players. Now, at what level should we play is a difficult question, with all kind of global minimum tax imposition and so on. But I believe that we should make it easier for entrepreneurs to come here. We should make it easier for them to have a business model that is sustainable over time. Nobody comes here because of the sun and the sea and so on. They come here if they think they can prosper. They can have a business that is sustainable. So to answer your question, and I said predictability is important, is key, right? But also, if people say, and then this redistribution of wealth is important in an economy. You can't have an economy where, you know, only the tops are earning and nobody else in the economy or society is winning. It doesn't work. We have to make sure there's a fair sharing. Having said that, we are not, you know, just an island and without any competition. There's plenty of competition. So we'll have to see, how do we attract more investors? How do we attract more talent in this country? And if the tax regime is not appropriate, people won't come. And we have to be candid and real about it.
Indeed. Ravin, thank you so much. It's been a pleasure having you on our podcast.
Well, thank you very much for having me, and wish you well.
Thank you.
Thank you.
Thanks to everyone who has watched and followed our series. If you've missed an episode, you can catch up on our usual social media channels on YouTube, Facebook, or LinkedIn. Make sure you follow us so that you can learn about our future events around the budget. Thanks again.